Good morning and welcome to this week's Rational Thinking. My name is George and I'll be taking you through the week's events in the currency markets. In the UK, Theresa May yet again lost another key vote in Parliament, and we also saw some fairly weak data out in terms of inflation and GDP. In the US, we had trade tensions with China continue and some mixed data come out from the economy. And in the Eurozone, we had some real poor industrial manufacturing data. The pound suffered last week as Theresa May lost another key vote in Parliament, and the pound fell on poor economic data. On Thursday the 14th, Theresa May lost a key motion in Parliament on her amended agreement. She lost by 303 votes to 258, and the key reason for this is that Eurosceptics within her party, led by Jacob Rees-Mogg, actually abstained from the vote as they felt that it appeared to rule out the event of a no deal. In terms of the economic data, we had weaker than expected GDP. Yearly growth slowed to 1.3%, and this is actually the slowest rate of growth since 2012. The reason for that being that this Brexit uncertainty that we've seen in the market for some time is really hitting spending and investment. And outside of that, the other key measure that again disappointed was inflation. So this fell to 2-year lows. So the CPI came in at 1.8%. Down from the 2% target, but also down from the previous measure of 2.1%. Last week was a fairly quiet one for the Eurozone, but we did see some really poor industrial data come out. The industrial production for the whole of the Eurozone actually fell at its fastest rate since the 2008 financial crisis. It fell by 0.9%, which is actually more than double the 0.4% forecast that we initially saw. What this tells us is just the latest in a growing list of poor data coming out from Europe, showing that there's an increasing trend of poor economic growth. In the US, we had a mixed week as we had trade tensions continue between US and China, but also some mixed economic data came out as well. So in terms of the trade tensions, there's increased concerns that the March the 1st deadline, there will be no deal yielded by that time. And as a result, safe haven currencies like the US have been strengthening. Alongside that, another reason for USD strength in the last week is that the core inflation number was actually up for a third straight month, which again underlines the need for the Federal Reserve to keep an eye on pricing pressures. And at the back end of last week, we actually did then see a little bit of negative USD data that stemmed some of the gains that were seen last week. And this came out from the retail sales figures. They were down to 1.2%. And it was quite a damning decrease because all but 2 of the 13 major retail categories showed a decline. This week should see plenty of data coming out, especially in the Eurozone. In the UK, which we'll start with, we have the ILO unemployment rate. This is expected to fall to 3.9% from 4%. In the US, on Wednesday, we have the release of the Federal Reserve minutes, which will be interesting to see their response to some pricing pressures that are coming from the trade tensions, but also from the domestic economy. And then in the Eurozone is where we see plenty of data releases. So firstly, we have the ZEW economic survey come out of Germany. That's expected to will decrease to minus 18.4 from minus 15. Then we also have the harmonized index of consumer prices coming out of Germany. That's expected to remain at 1.7%. The last bit of data that's coming out of the major economy in Europe is the manufacturing PMI, and that's expected to increase to 49.9% from 49.7% previously. The final bit of data, the final bit of key data coming out of Europe next week is the Eurozone market PMI composite, and that's expected to increase to 51.1% from 51. Thank you for tuning into this week's Rational Thinking. As ever, please don't forget to subscribe, like, and share the video. We're in extremely volatile market conditions at the moment, so if you'd like us to have a look at your foreign currency requirements or answer any queries around where we see the markets heading, please don't hesitate to get in touch.